Hello everyone, welcome to the second lecture of our RBWM series for the most important topics. Each of these lectures are sure to be asked in the examination. So here we are securing sure shot marks to qualify our exam. Alright, so make sure that you watch these videos very seriously, very diligently. All of these videos are available on the YouTube channel, so make sure that you subscribe, you like these videos, and do not miss any of them. Let us start with the second topic, which is the retail banking business models. So we know that banks they follow different business models or approaches for the retail banking activities, and according to the role and importance of retail banking, the different models are adopted, right? So we have three types of models which are adopted and they vary among the public banks, private banks, and the foreign banks. First, in this criteria, we have the SBU or the Strategic Business Unit. The main aim of this approach is dividing the business on the lines of SBUs. For example, any firm ABC, which is the parent company, right? They can start up various other profit business, like they can be involved in car manufacturing and selling. They can also be involved in jewelry business. Also, they can be involved in, let's say, textile business or any other service, right? So, what they're doing according to the activity, they are dividing their strategic business units. And these units are autonomous divisions, independent divisions. They are small enough to be flexible. Each of the unit will focus on their business goal only. And they are also large enough to exercise control over most of the factors. So, starting from the accounting, financing, management, marketing, everything is done in an autonomous way by these divisions. So, we are dividing different types of SBU, and these can be defined as profit centers, which focus on product offering and market segment. So there is one goal or objective of the firm which they try to achieve. So it can be a business unit of a large corporation or it can be a business in itself, right? So this is how we create SBUs. So the demarcation as a SBU is more a management by objectives. So we have set our objectives. If I am a car manufacturer, if this SBU is for the car manufacturing, so the different types of cars, whether they are catering to the uh, wealthy class or they're catering to the middle income group, on the basis of that, they will provide cars that have more utility or more luxury, the other features which are expected by the customer segment, right? So, management by objectives, wherein the business model is dealt as a modular strategy for achieving the targeted profits. And if the retail plans are not translated, then they will knock down the module or if they will shut down the SBU. So we are managing the SBU by objective or goals that are set. Then second type of business approach which can be adopted by the banks is a departmental approach. So what was happening in SBU, we were creating separate units. But in departmental approach, all the activities will be performed under one umbrella. Just the tasks will be differentiated. So rather than dividing on strategic or business lines, an organization can be divided on the basis of functions that the various teams perform. So these functions can be accounting, marketing, finance. So we have a separate accounting team, a separate marketing team, finance team, and planning team, right? Again, no one department is going to interfere the functioning of another department, but the information gathered or the decision taking of one department will affect the other departments. So they are interrelated. It is a functional approach within an organization. And every department has its own manager as well as a chain of command. So under the manager will be the persons who are working employees full time, part time, and these manager will be separately for each of the department. So, what are the merits and demerits of departmental undertaking? There is complete government control, fair practices, revenue. It is suitable for national security. However, there are demerits as well. There is inflexibility of operation, delay in decision making, there's undue government interference. Now, if we talk about the different types of banks, so the public sector banks, they have adopted the departmental approach, and it indicates a more general one, with retail banking as one of the business models and not a focused business model. The public sector banks, they perform all of the banking, corporate banking or retail banking under one umbrella. They do not set up a separate branch, right, or a separate whole SBU for performing the retail banking. But there are departments which are created, and each of the department will be separate but interdependent, right? In the old generation banks also, the approach is more conservative. Retail banking is built as a part of the overall business. So the old private sector banks also follow the departmental approach. But if we talk about the private sector banks or the foreign sector banks, they have adopted the SBU. Now, if we talk about the smaller businesses, so they have adopted the integrated approach. It combines all the socio-economic aspects and adopts a cohesive approach. Their assumption is that having a unified business, that is, having a unified business, all the functions performed under one umbrella, will reduce the risk and increase profitability through scale rather than having separate entities. So they have all the types of businesses, but they are performed under the same umbrella, right? And they feel that it will reduce the risk as well as increase profitability. All right. So banks, they follow the approaches or the models with regard to the product processes, the delivery channels and technology. Whether the banks, they adopt a SBU approach for the product process or a departmental approach, or do they adopt the departmental approach for technology or not. So this is important. So here we are seeing the business models. Banks, they generally structure their retail banking models based on the positioning platform. Positioning platform means that the strategies are based on the positioning objectives, and they vary from bank to bank depending on the importance attached to the business model. So, how do they want to position themselves in the competitive environment? Do the banks want an image of being a retail bank, or they want that they are a unified business which has retail banking just as a segment of the total business, right? So it depends upon their positioning objective, and then they will adopt the business model. In the old generation private banks, the positioning platform is very clear. It is based on the overall business plan in line with the size and scale. So it is a profit oriented scenario for the old generation private banks. Even the new generation private banks have a clear vision about their positioning platform. They want to be at the top slot of all the class of banks. They have the benefit of technology, strategy, customer, business initiative, and aggressive positioning. Private sector banks have clear positioning strategies about where they want to be going forward in the next 2 to 3 years, and they have suitable action planned to achieve their objectives, right? So they have clear objectives or clear strategies and clear goals. How they want to perform something, where do they want to position themselves, when do they want to introduce a product. So they have a clear strategy. If we talk about, however, the foreign banks, they do not go by positioning but are purely based on the business objective. They will very aggressively enter a business, seeing that it is generating profit for the other firms or other banks. But if they do not realize profits, they will exit the market, right? So they go by business objectives, customer, business, and profit targets. They can take a call on the business model itself or one segment. And if it is not profitable, they will exit the retail banking segment itself, or they will exit a particular business line. Let's say they have introduced a new type of credit card, right, on the retail side, but it is not generating as much profit as was expected. So either they can discontinue the credit card product or they can exit from the retail segment as a whole. The classic example is of BNP Paribas, which entered the retail banking space very aggressively during the late 1990s, and they had a full-fledged brand building exercise, but they quit the space after they found that it was not a profitable segment. Likewise, the American Express Bank also came out with their credit card business after taking stock of its viability. They also exit the business. And recently, Citibank has quit the retail business as a part of the global strategy, which has been acquired by the Axis Bank. So these are all the types of models which are approached or adopted by the banks, and the differentiation, the characteristics of the SBU, the departmental approach is very important. Then the different types of banks, how do they approach the positioning? Do they make their models or decide their strategies based on positioning platform, or completely on the business criteria or business focused? So all of these topics are very important, and definitely 2 to 3 questions will be asked from here. So make sure that you thoroughly understand these concepts. If you face any doubts, any queries, any confusion, you can let me know in the comment section. I will see you again in the next session with another very important topic. Till then, make sure that you like the video, share it with your other fellow aspirants, and subscribe to the channel. Not just these videos, but all the important updates you'll get here itself. So thank you so much and all the best.